class to kind of help you along with this market. You know, lots of opportunity out there. There's tons of opportunity. It really comes down to having a plan, sticking to the plan. The folks that are crushing it right now are the folks that have a trading plan and they're sticking to their plan. The folks that aren't crushing it, the folks that are still getting, whipped around and seeing, massive losses, are the folks that are chasing the market, are making decisions based on what they saw yesterday and hoping the same thing still occurs. It's folks that just simply don't have a plan that's consistent from day to day to day. And whatever that plan is, I try to give you different ideas because I don't want to just sit here and feed trades to people. I'm not a CTA and legally can't do that. But B, it wouldn't teach anyone anything, and that's my goal with the website, is to make you self-sufficient in whatever you're doing. There's tons of different ways to make money online. You can do list building, you can do affiliate marketing, you can sell stuff on eBay, you can create your own product and sell it. There's all kinds of stuff you can do. Then there's trading, there's real estate. There's a lot of things you can do without ever having to leave your house, even in real estate. But anyway, I'm going down a side thing. My eyebrow is just going down kind of a side path right now. And all those, any of those require systems and require consistency in order to get results with it. So same thing here with trading, is have a trading plan. We talked, before I went on spring break, we talked about breakout strategies this week. So yesterday, today, tomorrow, I'll talk more about bounce strategies. And then next week, I'm going to share an even different strategy with you that's kind of a combination of the two. And one of those, and maybe none of those, but I think one of those will fit into your personality type and will help you start developing that trading plan. And then from there, you can start finding the consistency that you're looking for in the marketplace. A lot of folks right now, I've heard some chatter. The big move's gone. We've missed it. That's not true. Stuff is still happening. We've still got a lot more news coming. There's earnings that are going to be coming out. There's you've got entire countries that are locked down. There's a lot more that's still coming from this and the aftermath of what's been happening. So don't think that you've, quote, missed it. Still a lot of opportunity. But again, that opportunity only comes along if we're consistent with our application of something. So let's go ahead and pop over to the markets. I'm going to do the same thing I always do. We're going to talk about futures, talk about Forex, talk about crypto. But with futures, I'm going to spend a little extra time because I think it's easiest to demonstrate here how we can look at bounce strategies. But the same stuff can be applied into crypto, and the same stuff can be applied into Forex. Forex is a little different bear simply because it's a very it's a marketplace, and my train of thought just left my head. It's not a speculative market, it's a utilitarian market. My cat's over here meowing at me and just totally took my train of thought. Anyway, so crypto is Forex is just a little bit different because of the utilitarian aspect of it. But even with that, we can still apply some of the momentum strategies if you choose to. But I'm going to spend most of my time demonstrating what we're talking about here using futures as kind of that sounding board. But the application is the application, and it can be utilized cross-platform and cross instruments. All right. So with that said, I'm going to switch screens over to this one, and we'll talk a bit about that. Now, I have up, right, E-minis, crude, and gold. So E-minis, crude, and gold. I mentioned yesterday there are micros of the E-minis, micros of gold. There's also micros of NASDAQ and the Russell. So folks with smaller accounts, you could look to trade micros and still participate in futures without the same level of risk that you would, or necessary, or needing the same level of account size for margin in order to trade in the actual E-minis or full mini golds. So anyway, what we're looking at here, let's start with just the levels, and then I'll come back and talk about the bounce strategies. So let's see here. Sorry, I'm going to turn off. I've got these notifications that are popping about. One of the threads I subscribe to is blowing up this morning, and my phone is just going to vibrate itself off the table here, I think. So starting off with E-minis, we talked yesterday. We had halted trading coming into the U.S. session yesterday, or just before the U.S. session yesterday, actually coming into the U.S. session yesterday. So trading had been halted, and we were talking about this level, this 2400, as a potential level of support or resistance for us. It had come down to that level and paused, and then we were looking at pullbacks. We were talking about pullbacks up to 2450 or even 2500. Never quite got there yesterday. It came to 2450 and then repelled off of it and pushed lower, pretty consistently. Then overnight, over in off hours trading, came to 2450 and then again pushed lower. So what we're looking at is the same process for today, which is looking at levels, because we're in a downward trend. So we're looking at levels above where we currently are that price could potentially pull back to. That's been a key level of in this point, resistance, because we're going low. We want to find resistance points that are above us. It's that ceiling that we're going to hit our head on, right? So we want to look for resistance points that we can then go short off of. 2400, it's a whole number. It's also been seen, if we go back for a couple of days now, 2400 has been a key point of what was first support. Came down support, and then it became, after it broke through, it became resistance. So 2400 is a resistance point for us. So if we're trading a bounce strategy, we would look at the direction of the trend. So in this case, we're in a downward trend. And then we would look for an area where price could come back up to, and then we would go short, trade the direction of the trend off of that area. So in this case, 2400, key area. If price can float back to that as the market session gets going here in 30 minutes, the regular trading hours begin in 30 minutes. So if we can float back to 2400 and then short off of that, that would be trading a bounce in the direction of the trend. So same thing over here with crude. Crude didn't pull back yesterday. We were looking yesterday when we came into the marketplace. We were looking to see if it could pull back to 26 or even 27. It never did. Crude just kept falling off that cliff. Although in off hours, it's kind of found a little channel here between 24 and 22. So looking at crude, we're in a downward trend, 4-hour and 30-minute both agree. We're in a downward trend. And if we can pull back, so if this can pull up to 23, we could look to sell off of 23. It's a whole number. Or even if it pulled back to 24, we could sell off of that and trade with the trend. That would be the direction of trading with the trend. So if you're looking for a bounce trade, which is what we're talking about here, a bounce trade would be waiting for it to come back to that key area and then selling in the direction of the trend. So you're gonna sell into a large green candle. And that's what we talked a little bit about yesterday as well, is psychologically that can be tough. When we're trading breakouts, if we're trading, let's say, a breakout of 23, I don't know, I'm just throwing a number out over here. Well, let's use crude because we're talking about crude right now. So if we're trading breakouts, we would look at 22 and say if it breaks below 22, we would continue short with the direction of the trend. So in doing that, you'd have a red candle coming through 22 and you'd be trading with that red candle. When you're trading a bounce strategy, we would have to be selling in the face of a green candle, like we are over here in the E-minis, right? We've got this big green candle, and if we're going to sell off of 24, we have to be able to be comfortable selling in the face of that big green candle. Psychologically, that can be tough, because we see the trend, but then oftentimes there's a part of us that goes, gosh, I know the trend is down, and I know I've got my level up here that I should be selling off of, but it sure looks like that's going to continue. And that's where we get that head trash that starts coming in and talks us out of being consistent with our trading plan. So we have to have a plan that we can execute consistently, whether that's a breakout or a bounce. But today we're just talking about bounces. So if you're going to play a bounce strategy, understand that you're going to have to overcome that mindset piece and be comfortable selling in the face of a big green candle. You're still going in the direction of the trend, whether that's a 30-minute trend or a 4-hour trend. You're still going in the direction of a trend. However, the moment or that current candle might suggest something different, and you've got to be prepared to deal with the psychology of that. So anyway, that's looking at these bounces. Now, where do you put a stop loss when you've got a bounce trade? That's the other thing to do. You've got some momentum that's really pulling back to that key area. Remember, when we talk about support or resistance, or any other line that you draw on your charts, it's just a suggested area to trade from. It means something has historically occurred around that point. Price has historically struggled or stopped around that area. It doesn't mean that price is going to come to 24 exactly, or 23 exactly, or 2400 exactly, and then just reverse. I mean, it certainly might, but you've got some momentum bringing it to there. So chances are it's going to poke through that by a few points. So where do we place our stop? And that you've got to trade with the stop. Trading with the stop is you've got to control your risk. We have to use stops. I mean, you don't have to do anything, but it's suggested to use stops because that's how we keep trades from getting away from us. So where do we put that stop? If we're trading a bounce trade, if we're waiting for this to come to 23, or we're waiting for this to come to 2400, or we're waiting for this to pull back to 1490 or 1500, where would we put our stop loss? Well, for me, I feel like it's best to base that stop on the trade range that you've currently been operating in. So the stop that you're going to use for E-minis would be a different distance from entry to stop loss than it would be for crude, and that would be different than it would be for gold, simply because a couple of points in crude can happen at the blink of an eye, whereas it might take E-minis a little longer to do that. So it's important to place that stop based on how that instrument that you're trading is actually working. So in this case, you can use some tools. You can measure the size of your candles or bars coming into that session, and say, okay, and some instruments are going to be richer than others. It's going to take a greater amount of stop loss than others, but use that, and then use some, either use that whole number or a fraction of that to create your stop loss. So if we look at the average bar size on these, on a 30-minute especially, we'd be looking at 25 to 30 points on these. Now that would be a really wide stop on E-minis. You'd have to have a really large account in order to be able to trade with reasonable risk at that wide of a stop. So maybe you take it down to a 5 or even a 15, and you look, okay, well, when things happen around these key areas, what's reasonable around these key areas? And you can say, okay, well, look, when we poke through this 2400 previously, 10 to 12 points was about the max that it went through. So I'd be comfortable if it poked through 2400 to set my stop loss, at 2412. Now you've got 12 points of risk. Still fairly high for E-minis, But maybe, if that's too wide for your account size on an E-mini, maybe you go to a micro E-mini and take a little smaller dip on that. But I would certainly recommend basing your stop loss on something that's quantifiable that has to do with that instrument. I know some people when they look at and I'm using E-minis again for an example, might just say, well, I'm always going to have a stop loss of 5 points. That's my max, 5 points. And if I'm going to trade crude, it's going to be 5 points. Well, you can't really, you can do whatever you want, but I feel like it's better to base it on the volatility of that specific instrument instead of just picking an arbitrary number. Again, do with it what you want, but I like to try to base things on quantifiable numbers that apply to specific instruments. That way we're setting stop points, we're setting profit points based on the volatility of that instrument, right? So anyway, that is it. So looking over here at the E-minis, if we're playing bounce trades, we're in a downward trend, we'd want it to float up to 2400 and then sell off of that, or any other area of potential resistance that we're seeing. 2375 actually, if you look here on a shorter term on this 30-minute versus the 4-hour, actually there's a smaller point of resistance down here at 2375, which is where we are right now. But of course the live session doesn't open for another 30 minutes, so probably better just to wait for the live session, regular trading hours to actually begin before we look at doing anything there. Same thing over here in crude. We're in a downward trend, so if we're playing a bounce trade, we would want it to float up to 23 or 24 and short off of those areas if you're playing a bounce. Of course, we seem to have developed a little bit of a channel here, so you might even, if you want to do a counter trend, it looks like we're finding a bottom over here around 22 to look for potential counter trend trades. But remember, that's counter trend. The trend is down, so if you're trading with the trend, we'd want it to pull back to a key level and then sell off of that. Gold is in a downward trend as well. Yesterday I talked about 1500, and there's a couple of points to be picked up off of 1500 yesterday, but the overall trend is down. So again, we'd be looking for this to pull back to a key area. 1490 is on an intraday basis certainly has been a key area for us here. Looking at 1490 to take it short off of and trade with that trend. So that's the big deal, is you want to continue to trade with that trend. So I hope that gives some additional information about trading those bounce style trades. Let's have a look over here at the foreign exchange market. We're seeing some tremendous moves in Forex. So I came in yesterday. It was really the first day to look at it, and really blown away. So there's a lot of these instruments that I was staying away from because I felt like some of the shorter term days were just really overstated. But it looks like that's currently the world we live in, is a nice volatile Forex market, which we haven't had in quite some time. So right now we're coming into the morning where we're seeing moves of 160 pips, 200 pips, 250 pips. The shorter term, if you look at the 30-day average, it's far exceeding the average movements. However, if we look at what has been happening over the last 5 days or so, we can see that there's still opportunity for some of these to really move. So like the euro yen, for example, it's moved 160 pips. 5-day average and the 15-day average is closer to 200. So there might still be some opportunity there. To look at those. Same with we've got the pound versus the USD. Pound's in some all-time low territory, and might be some opportunity there for that to start pulling back up. Today pound USD we've moved 200 pips, but if we look at the 5-day average, we're at 350 on a 5-day average and about 230 on a 15-day average. So is there opportunity there for that to continue, at least to get that 20 pips that we're trying to get on a breakout style trade, and it seems like there may be. So, sticking with watching currency strength to find out what's moving is certainly still the optimal strategy. Right now, the especially this week, the last few days, currencies have been moving significantly greater than they have in the past, which creates a lot of opportunity. At the same time, though, like I've mentioned previously, if the current volatility is quote too rich for your blood, you don't have to trade it. You can step back and just stay away from it. You don't have to be pushing the button at every moment of the day. So keep that in mind, but still use your currency strength. Now, with that said, looking at breakouts or bounces can still be applied in the currency market. I would just encourage you to look at currency strength to find out which currencies are moving, and then look at your quote key area levels off of that. I don't really believe in those key areas as much in foreign exchange as I do with crypto and with futures, with stocks. Crypto, futures, stocks are speculative. Foreign exchange is utilitarian. It's an entirely different bear. But with that said, if you have a consistent way of approaching the market and you're applying it consistently, you can still use those same processes and be successful in Forex. So, take that and do with it what you will. Over here on this screen, let's pop over and have a look at what's happening in the crypto marketplace. We mentioned yesterday, still on a downward trend on both of these, on Bitcoin and with Ethereum. However, Bitcoin did see a bit of a run. It came up to 5,600 and didn't break through it. It didn't stop. It actually and looks like we're continuing up. Trend is still down, though. The 4-hour trend is still down. So we'd be looking at key areas for potential reversals if we're going to trade with the trend. So if we're looking at a bounce style trade, we would look for this to come to 6,000 is a big whole number up here. They can push to 6,000. Certainly looking to short it off of 6,000 would be that opportunity for us to trade that bounce with the trend. So anyway, that's what we're looking at there. Over on Ethereum, same thing. We're looking for trading with the trend and looking at bounce style trades. Right now we're coming at we're up here at 2,800. That's been a level where we've seen some level of resistance before. So we had support, it broke it, became resistance. We're up here now. 28 to 30 would be that area to look to sell off of on a bounce trade to trade with that trend. So that's where we are for now. All right, I'm gonna go ahead and get off here. My phone is still blowing up, and I'm seeing some quote urgent messages come across I need to take care of. So I'm gonna let you guys go. If you have any questions about trading bounces, let me know. You can talk to me in Facebook, or you could also hit me up just through support at makemoneyfromyourlaptop.com, and I'll be happy to help you out and answer any questions you have. So if you're looking for info about breakouts, go back to some videos that we did last week or week before last, because last week was spring break, but week before last, and you'll find some information there about breakouts. This week looking at bounces and hoping to provide some solid examples there, and then next week I'll talk about something that's kind of a combination of the two that might appeal to you as well. The key is to find something you can do consistently and then keep doing it. All right, so that's it for now.